How are you doing? My name is David W. Williams, and I brought a special guest here to kind of talk about the macro, what we see going on in the market, give us a really good understanding of how the charts can kind of put us in the right direction of where the market is going. I got Lance from BH Capital Enterprises here, and the reason why I brought her on is because she has a lot more experience than me. She's been through a lot more market cycles, and she's somebody I really learned from to really kind of understand how to look at technical analysis from a long range and break it down into a shorter range, and how we can kind of use some of these charts to understand the probability or what could be probable in the direction that the market is going. So, Lance, how you doing today?
Pretty good, David. How are you?
Doing
Glad to
good.
glad to be on talking with you again.
Appreciate it. Glad you could come through. I had you before earlier, and a lot of people got a lot of value from that particular video that we done. And one of the things that a lot of people told me was that when they first started coming into the markets, they really didn't understand our conversation. But as
Hmm.
they got more and more experience, they tapped back into the video, and a lot more things made sense.
Oh, that's good. That's
So
good. I
one of the
like
reasons
that.
why definitely I wanted to bring you on because I knew you could add a lot of value. So how's everything going for you? How you been doing this summer? It's been extremely hot.
Man, it's been real hot. I've been kind of, honestly, I've been kind of in the background,
Okay.
kind of just working on myself from a mental and emotional perspective.
Okay.
So I don't think I've traded since maybe April, May.
Okay.
But I've just kind of been glancing at the markets here and there. But yeah, a lot of personal stuff going on. That I just said let me step back from the extracurricular quote unquote stuff and just focus on processing what's going on in my life right now. Um, but yeah, things have been good. I think things are on the up and up now. So trying to I'm kind of slowly and gradually working my way back to the markets on a more regular basis, not pressuring myself, but just kind of easing myself back into it.
Okay. So let me ask you really quickly, since you brought that up. Why do you think it's so important for a person that's in the markets to really make sure that their internal situation or their psychology is correct before they start trying to really get involved in the market, especially for an extended period of time?
That's a great question, and it's one of my the big regrets that I have with the markets. But the people that I was learning from at the time didn't really stress the whole mental part of it. But your mind is the bridge.
Yeah.
If the bridge isn't right, you're not able to get onto the other side to where you desire to be, whether it be some sort of financial desire or just a desire with the markets. If that bridge isn't trump tight, then you're not going to be successful in the markets because a lot of people come in and they see the day trading. They're like, oh my god, I can make $1,000 a day too. Not that you can't, but it's just not as simple as it seems. You There's a lot of things that we have to unpack with ourselves before we can really get that consistent success in the markets. And the best of us really do focus on that mental part of it, whether it be I went to see a therapist or whatever, in order to get that success. So the mental part is the most important part of it, and that's with anything, especially David. I know you were an athlete in school. I was an athlete in school. The knowing how to shoot a ball in the hoop isn't the most important part. The deadliest players, the most successful legendary players were just eons above everybody else in terms of their mentality. So mentality is everything.
Definitely, definitely, definitely. Okay, so rolling into kind of what we're talking about today is what I want to kind of ask you, and the reason why we're asking you this is that a lot of people were taken surprise or taken they were taken by surprise how the market, let's say late last year, earlier top of the year, started really going on this really strong bullish run. 2022 was really, really bearish. We sold off a lot. I think the S&P was probably down maybe 15 to 18%. Then late in the year, we went on this really bullish, strong bullish run, especially in the tech sector. And it took a lot of people by surprise because a lot of us were expecting a recession or maybe a small recession to kind of put a damper on the market. Maybe hypothetically, best case scenario, we trade sideways.
Hmm.
Why do you think the market has gone on such a bullish run? We're in now the ninth month of the year.
um so Going to the part where you talked about thinking that we're going into a recession and stuff like that. One thing that I want listeners to keep in mind is the markets are always forward looking. Um, the whole uh, buy the rumor, sell the news. It's not just a cliche. Um, the it's important to keep in mind that just the beginning talks of recession, 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 that was a big reason why the markets were bearish. Yeah, 2022. So the markets wiped out all the gains from 2021 in 2022. Um, if you also, for those that may not know, eight times a year, the Federal Reserve puts out a report called the Beige Book. And typically, the Beige Book comes out about 2 weeks before FOMC. And so basically, each of the 12 districts of the Fed, they report on how the economic activity in their districts. So if you go back to maybe January 2023, that Beige Book, it pretty much covered the last like month and a half or so of 2022. So probably the last couple of Beige Books of 2022 and going into 2023. If you read those, it was basically hinting that the acceleration of economic activity that we saw during COVID or whatever the COVID economy pretty much had peaked at that point.
Okay.
And so one thing about the markets too is one thing can be bullish today, but next year that same thing could be bearish, and it all just depends on the context of what's going on in the economy. So boom, COVID hits, everything gets shut down. So to see that explosion of growth, of course that's going to be a bullish thing. But when you start getting into, okay, inflation's getting out of hand, then you don't want to see that growth. So now that growth is no longer bullish, to the markets. It's bearish. So the markets want to see the opposite happen so that it can start to run. So to read the Beige Book, and the Beige Book is giving the impression that the that crazy economic activity, uh, things are starting to slow down.
Okay.
So slowing down means, okay, maybe inflation will start coming down. You know what I'm saying? So in the midst of all that, um, tech was at a huge discount, right? Um, and one thing that I talk about when it comes to technical analysis is doing what's called a top-down analysis. So you start with the yearly chart and look at the whatever ticker. Look at the chart from a far out perspective. So you're looking at the most time that you can see, and then you just work your way down from there. So what you'll see is if you take a look at the yearly chart for SPX, you'll see that it just exploded from 2010 all the way to 2021, straight
Mhm.
up just exponential bullishness. Um, and so for the last like 2.5 years, really, SPX has just been ranging from that when you're looking at the yearly chart. Of course, you'll see different things, more micro trends as you get into the lower time frames. Um, but I think coupling the quote unquote COVID economy, kind of moderating, um, and the economy starting to, or seemingly starting to do what the Fed wants it to do. So that maybe inflation can come down, maybe interest rates can come down, things like that. And then from a technical perspective, just a lot of companies, just the markets being at historical demand levels played a role too.
Okay. So kind of understanding that the market. So let me ask you a question.
Mhm.
So you talked about the SPX being up on that 10-year run. do you think because of the extended run that the SPX was on, that we were due for a pullback, or do you think something led to the pullback that we saw and then turn around and we went back into a bullish run?
I think we're absolutely due for a pullback, like
Okay.
overdue, because the markets were definitely overextended on the yearly chart, and you don't see that a lot. Um, so it was definitely due for a pullback. Um, I think me, as you know, it's no secret I lean more on the technical side, and you're more so on heavier on the fundamentals.
Hmm.
But me as a more technical trader, I would look at the yearly chart and say, "Yo, this is kind of overextended." So that kind of cues my mind to be looking for something fundamental to kind of validate what I'm thinking. So that's kind of how I marry technicals and fundamentals. Technicals just kind of hint to me to be looking for something to come out in the news, to either confirm or deny whatever I think I'm seeing with the price action.
Okay, so let me ask you a question on that. Okay, so when I look at even look at the SPY or look at the Qs, especially over the pandemic period. So we had like the 2 year period.
Hmm.
If we look at like the 50, but most importantly, we look at the 200-day moving average, we were very much separated from that particular average and we kept going up, up, up. So it means that the prices became more expensive over time, but people kept buying it at a higher price.
Yeah.
For a person that's trying to trade that, often what I find in the market is that we can have even a fundamental and a technical analysis around why something we think may be overvalued or
Mhm.
overpriced,
Mhm.
but it's still people still keep coming in and buying it at higher and higher prices. So your timing is often wrong on a trade.
Yep.
Is there a way that a trader can kind of protect themselves from that? Because if you look at like 2021, the whole market was screaming this market's too expensive.
Mhm.
Fundamentals was too expensive. The PEs was way out of line. Even now we got companies with PEs in the 200s.
Mhm.
Um, the technicals were so separated from the actual price that people were paying was separated from the moving average, and it kept going up. But if you would have bought in, let's say middle of the year, you probably would have had to close your position because it just kept going up.
Yeah.
So, is there anything that a trader can do to protect themselves from being too early on those type of trades?
Um, what I like to do is I like to, again, when I'm doing my top-down analysis, I like to make note of the big levels.
Okay.
So, like the levels that I'm seeing on a 5-minute chart or whatever are not super significant unless they also coincide with something that I'm seeing like on a weekly or a monthly chart or something like that. So I like to go in and make note of where buyers and sellers are historically speaking. And those are the areas that I watch for. Um, it's not easy. It's not easy at all because you see all the action happening, but um if you can just watch for confirmation at big time levels, then you should be okay. And you
Wow.
also wanna give you want to give it a little time. I think um a lot of people are misled and they misunderstand thinking that day trading is the only way that I
Hmm.
can make a living in the markets. And you're living proof that that's not the case.
Yeah.
I know you do some day trading, but the majority of your trading is like more position trading and swings. Um, and you found your lane in that. And I actually got caught up in that too, trying to day trade, and I had to really be like, okay, that doesn't necessarily suit my lifestyle. Um, but yeah, just understanding that you don't have to day trade to be successful. Um, a lot of times people lose context of the bigger picture when they're simply just day trading. And it's easy for that to happen, just because, hey, the market's bounced today and ran hard. You're thinking, the whole narrative has changed, but you fail to see what's happening on, a weekly chart or a monthly chart or a yearly chart. So it's important to keep that bigger picture in mind. Like I said, at the beginning, that the SPX has been ranging for 2.5 years, almost 3 years at this point. So me as a trader, I'm already taking note of what that range is. So I want to see what the bottom of it is, about the midpoint of it, and the top of it, and I make note of those levels.
Okay.
Um, and those levels that tends to be significant in buying or selling, or just ranging, depending, on what happens. So typically, when those levels are hitting, I'm looking for some kind of narrative, fundamental narrative, that may give me an idea as to what will happen. And patience overall, just being patient, um, will save you a lot.
Okay, definitely.
But also trying not to be biased, because the price doesn't always reflect the true value of a company. And we saw that in 2022 with a bunch of these unicorns. Oh, this company is worth $1 billion. And just because the share price is 150, it doesn't mean that this is a more valuable company. We saw companies go from 300 all the way down to pennies.
Yeah.
So that's a thing too. It's kind of trying to separate the price of the stock from its value, because the price changes every day, regardless of what's going on with that specific company. It could be impacted by any number of things, and some of those things might not even be material to that company.
Okay, definitely, definitely. Now you touched a little bit on tech, so let me kind of ask you, can you go a little bit deeper? Why do you think bullish sentiment has been so strong in the tech sector? Where we got like seven tech companies pretty much leading the whole queues, and also you get that overlap in the SPY also.
Um, Number one, from a technical perspective, tech was significantly discounted.
Okay.
Again, if you go and do a top-down analysis, start with that yearly chart with tech. Facebook specifically, I remember putting into my Discord group. Um, it was around the first few days of January, before the markets opened for 2023. I put a chart up on Facebook and I said, "Yo, I got a target," and this was just a conservative target of 200 for Facebook this year.
Hmm.
Um, because one thing is you don't necessarily see, not often anyway, multiple years of bearish activity, just
Yeah.
straight up red candles from a year to year perspective. And the fact that last year was just so bearish pretty much wiped out 2021's gains. Big tech started the year out at demand.
Okay.
And one of my rules when it comes to trading is I don't sell at demand. There are some caveats to that, but for the most part, when I break that rule, I lose probably 95% of the time.
Okay.
So that's a rule you don't typically want to break. When it's at demand, you buy. And all that you had to do if you would have looked at big tech yearly chart is say, yo, I'm gonna just buy and buy some time. That's it. You know, I wasn't able to take advantage of it because those premiums was crazy, but I was definitely wanting to get into like a Facebook 200 call for September, October, quarter four of this year.
Okay.
And you already know how that would be looking, especially since Facebook hit 326 or something like that. But yeah, so I think big tech was just really significantly discounted, and represented a great buying opportunity.
Okay. And
And
so,
of course, the AI hype, fed into that as well. And it was just hype, for the most part. And I think now the markets kind of want to see something material when it comes to AI.
okay, so now I got two follow-up questions. So the first one I'm gonna ask you is for the people that don't know technical analysis, like I may, and I know that you do. When you start talking about buying that demand, I understand what you mean by supply levels and demand levels.
Hmm.
But can you kind of really quickly explain to somebody that may not understand when you saying that the actual pricing or the chart was at demand, what you kind of mean by that?
Yeah. So demand is just another word. I just swap it out for support.
Okay.
So prices at support, that's typically where your buyers are, and you want to do what the buyers are doing. You don't want to trade against the you don't want to trade against the institutions. You want to buy where they're buying, you want to sell where they're selling. Um,
Okay.
but a lot of times, we do the opposite. It's mentally it doesn't make sense, but the data shows it. We have personal experience with it. where we buy where sellers are and we sell where the buyers are. So that's the important part. So when I say demand, I just mean support. And when I say supply, I just mean resistance. So yeah, that's that.
Okay. Now let me kind of ask you about this AI. So we saw this AI narrative get real big this year, especially top of the year as tech was starting to go up.
Hmm.
Um, I think of things from a fundamental standpoint. So, in my opinion, they created this AI narrative to make sure that capital can be justified in going back into tech. Because yeah, Facebook is Facebook, but now that we add in the AI, it looks different. Same thing with Nvidia. Nvidia to me was just a gaming company, but now we
Hmm.
add in this generative AI narrative. It now has a different dynamic, and now we start being more comfortable to having a PE in the 200s. So
Yeah.
yeah, so why do you think they came out with this really strong AI push? Because we know last year they were talking metaverse. Now nobody's
Hmm.
talking about metaverse. Now they're talking about AI. Why do you
Hmm.
think there was a strong AI push top of this year?
I definitely agree with what you're saying. They had to create something to get money flowing back into the markets, of course. Because what is the economy without the markets?
Okay.
Um, so that what you said. I also think I kind of compare it to the whole cannabis craze from a few years ago,
Yeah.
where all you had to say was I'm a cannabis company and your stock would take off. You know what I'm saying?
Yeah.
Um, but there comes a time where that no longer works, and the markets say, okay, now show us. We need to see something material on your financials that support a bullish case for this AI thing. And I think we're kind of moving into that now. Um, the beginning of the year, it worked to say, Nvidia's AI chips and, blah, blah, blah. Just the mention of AI, people were buying. But I think now that is kind of no more, really.
Okay. Okay. Now we've seen, especially over the course of this year, that the 10-year and the 2-year yields on the treasuries have been historically high. And but what we have not seen is that people leaving equities and going into the bond or the treasury markets. So what do
Hmm.
we think is influencing capital to keep buying tech and not just leave tech and move all their money into the treasury markets?
I think it's multiple things.
Okay.
One thing that I was thinking about, from a technical perspective, going back to what I was saying about tech was sitting historic lows,
Okay.
and then bonds and treasuries were sitting at historical highs. So me as a smart investor, do I want to buy bonds at highs or do I want to buy tech at lows? Which is going to give me potentially a better return? Probably tech. Um, probably tech. So that's one thing, but another thing is just the context of what's going on in the economy. While bonds have been historically safe, um, it's a lot of things that's been happening with the credit markets. So the risk is different now. And I think that a lot of companies and institutions aren't necessarily willing to take on that risk right now, especially with the credit spread being a little um, with the credit spread being kind of wide right now. It's just kind of risky to I know it sounds kind of crazy, but it's kind of risky to be holding bonds right now.
Okay.
Um, so I think that's what it is. I just think the credit risk is just kind of changing the picture of the so-called safe money investments right now.
Okay. Okay. Now going back to this AI, do you think this AI narrative is strong enough to drive the SPY and the QQ indexes to all-time highs over the next 6 to 12 months? The reason why I'm asking is that we've seen over the course of the past few months, as we started to approach that all-time high that we had right before 2022, we started to meet a lot of resistance.
Hmm.
So, do we think the AI narrative is going to be strong enough to get us back to all-time highs, or they're going to have to come up with something different?
I think they're gonna have to come up with something different.
Okay.
Because I mean, they beat that horse till it was dead and resurrected and dead again.
Okay.
So I think it's gonna take something else. Um, Maybe even companies showing in their business, how AI is benefiting them, with some numbers, some actual numbers, not with some hypothetical type stuff. Like they're gonna have to show and prove if it's gonna keep going. But I think it's gonna be something else though.
Okay, okay. And then what I want to ask you is that how do you think, as we're getting ready to go, I think we got what, 3 more months in the market, 3.5 months. How do
Hmm.
you think the market closes this year based on what's going on in the world?
Um, I kind of got a big range,
Okay.
probably from anywhere between about 4,300 and 49 ish, maybe up to 5K at the most. But I don't necessarily see the markets going outside of that range, at least not to the upside. The downside, anything can happen. Well, anything can happen to either side, but I think, the market will kind of range, for a bit.
Okay. Do you think that we have a strong end of the year rally?
We could,
Okay.
but 2023 has been just so crazy already that I just feel like I don't know, maybe,
Okay.
maybe. Let's see, the Q's been ranging pretty much since early June. Um, if it does break out, maybe it goes back to toward 408. But that would be my hypothesis. But for now, I just kind of see it ranging. Um, and we'll just kind of see what happens from there. But I think an end of year rally is definitely possible. Um, but I do have doubts when it comes to new all time highs. I have my doubts, but um, yeah, probably if it were to break out to new all time highs, I probably wouldn't go about maybe 2.5 to 5% above the all time high now.
Okay.
That would be my max for me.
Okay. Okay. Now, there was a lot of talk coming into this year that we were going to go into a recession.
Hmm.
And in my opinion, a recession is going to be kind of based on consumers not buying like they used to buy.
Yeah,
Now we're starting to see some softening, but we haven't really gone into that recession. If we don't go into the recession by the end of the year, do you think that can create the justification to keep driving the market up? Because we both know the market is designed to keep going up.
that's true. That's possible.
Okay.
Also, we got to keep in mind that we're going into an election year, and I think election years are historically bullish.
Okay.
Somebody can, correct me if I'm wrong. Um, but yeah, it's. I think a lot of things have been priced in already, and something like miraculous, like hey, the even just the perception that hey, they saved us from a recession could bring some confidence back into the markets and keep pushing it higher. um that's a possibility.
Okay.
Um but for me as a technical trader, nothing changes until the price creates a new trend,
Okay.
which I'm not seeing that right now.
I understand. Understand. Okay. So I'm glad you was able to get you on to kind of talk about that because we're looking to get into this new year. And what I know to look out for going into next year is if I see anything at a demand level, that's a good indication that it could shoot up. Because if I'd have known that, I probably could have took advantage of a lot of this tech. I was very bearish on especially a lot of the consumer based tech because I was like, I thought we was going into a recession also.
Yeah.
But
And
it, I'm
go
sorry, go
ahead.
ahead. No, sorry, go ahead.
Oh, no, I was just gonna say I actually thought about you at the top of the year, but I was like, yo, David, I'm pretty sure he already been looking at this. But yeah, I definitely thought about you when I was looking at my charts. Like, yo, I should, send this to David and see what he thinks. But
Yeah, I wish you would
I'll
have
do
sent it
that.
to
I'll do that moving forward.
okay, yeah, I wish you would have sent it to me because I know people cashed in big on the video. And
Mm-hmm.
I had no, it was at all, it was at an extreme low,
Yep.
but I was thinking that consumer behavior. See this, so let me give you my example. A lot of
Mm-hmm.
this stuff, the market is doing a lot of weird stuff that I've never seen before. So like last
Right.
year, I never traded through a bear market. So
Mm-hmm.
I didn't know really what was going to happen. I had my own analysis, but now I see it. I thought that this high Fed fund rate would diminish the customer sooner than it has, and to me, it really hasn't yet.
Mhm.
So I thought that this credit being so expensive would make it to where people would stop buying a lot earlier than they currently have. And we still haven't yet seen the consumer really turn down buying yet.
Yep.
So that's what I anticipated happening like mid-year, and it just hasn't happened.
Mhm.
And so I just think that until that consumer decides that we're going to stop buying and then we start getting lower earnings, we're not going to see it reflected on the charts.
Mhm.
So it's just
Yeah.
full steam ahead.
Yeah. Yeah.
Yeah. Yeah. So that's kind
It's
of what I thought.
yeah, and it's just y- I don't even think you're wrong. It's just like you said, timing.
Yeah.
But that's the timing is the hardest part. And even if whether your narrative is correct or not, sometimes the price won't even make sense at all. You know
Yeah,
what I'm
definitely.
saying? Like you'll be thinking one thing, and it's not that you're wrong. It's just that the markets can get just irrationally exuberant, and it just won't make a lot of sense at all. So my piece of advice to anybody is don't necessarily ignore what's going on fundamentally. Definitely keep that top of mind, but just identify those big time levels. Like where are the buyers and the sellers really like on my longer term charts?
Okay.
Because that's when the big time moves really happen.
Okay. Okay. Well, Lance, really appreciate you coming through. So if anybody wants to link with you on social media, where can they find you at?
You can let's see, you can find me at love underscore evolving BHCAP ENT LLC on Instagram, Twitter as well. You can email me Lance at bhcapitalenterprises.com. Yeah, shoot me a message in my Facebook inbox. Have been on Facebook lately, but if you message me, I'll respond. But I'm just not participating right now. But yeah.
Understand. Understand. All right. So I really appreciate it. Lance, we'll make sure that we check back with you probably mid-year, see what your analysis is, and we can kind of see how this thing works out.
I appreciate you, David. Thanks.
No problem.